Hi and welcome to the Market Alert for Friday, the 3rd of June 2022. Just before we get into the Market Alert and what happened yesterday, just to let you know, I will be missing in action for the next week, Monday to Friday, back a week on Monday. It's the first break I've had in more than a year, so I will be missing next week, just for the 1 week out of the year. But I'll be back a week on Monday, so prepare yourself for some really good trades next week. I still will be trading, but from obviously a different location. Okay, let's get on with what's going on. And we can see bad news is good news. Stocks soar as macro meltdown accelerates. So again, you've got this disconnect. The news is bad every day. All economic news is bad, and yet stocks soar. But I'm not surprised, given that London was closed yesterday. You tend to find this with bank holidays. The US tends to move to the upside. Nobody wants to sell into it. So, there you go. Imagine how high stocks will soar if payroll prints with a massive job loss. Yeah, amazing, isn't it? Yeah, I mean, there's tongue-in-cheek here saying that if the non-farm payrolls today are really bad, then just imagine how high the stocks will go today. It's definitely living in the twilight zone, isn't it? US factory orders growth slowed dramatically in April. Bear in mind this April data, meaning all of May's maelstrom is yet to hit. So more bad news coming for May's numbers. ADP employment data signals weakest labour market since COVID collapse. Small businesses have lost 278k jobs in the last 4 months. And yet the stock market moves up yesterday. The Dow in particular 435 points. So news today, well, it's the big one, isn't it, for the week. Non-farm payrolls, we're looking to add 325,000 jobs. Last month, 428 were added. So they've already put the figure lower, but you can bet your bottom dollar they're going to move the market to the upside. They'll say, well, it's not as bad as we thought it could have been, and they'll just move it up. The figure to focus on, I suppose, really is the unemployment rate, 3.5, 3.6. But let's wait and see. Brainard's out as well at 3:30 p.m. So a bit more there to add to the upside if the market wishes to do so, because she's bound to say something that will move the markets to the upside. And gold-silver ratio, well, silver's being allowed to move up at the moment. The dollar's having a bit of a rough time. We'll see later when the non-farm pay numbers come out, but at the moment silver is being allowed to move to the upside. But before we get to that, let's have a look at the Dow and see where prices moved yesterday. I think I've already given it away, and obviously if you trade you will have seen that yesterday the market moved to the upside. Straight reversal. Why did it move higher? Well, let me show you. Let's just have a look at the 30-minute chart. Here it is, the low. Like I always say in the Market Alert, watch the low for a major support area, and that was exactly the case yesterday. Oversold at the low. If you don't have the low, the previous day's low on your charts, you're scuppered, because they use this all the time, and the high, and no doubt they'll use the high this morning in order to move the futures up when the DAX futures open at 7 a.m. So you can see also you've got the climatic volume at this area. You can see the buying coming in at this area as well. Then reverse the market and then move the market to the upside there. In the ETX platform, the market moved up until the close without hesitating, a massive 741 on the cash market. From 230 to 130 was 435. There you go, you can see what can happen when you have bad news and how you can use it to your advantage to move the markets to the upside if you've got the clout in order to do it. So there you go, you can see massive move on the Dow. It's quiet overnight, no one's selling into it. London closed again today as well. Let's have a look at the S&P. Very similar picture which you'd expect. Straight reversal on this market as well. Bit of low volume in the daily chart for this one, and it's also overbought. Trading up to the 78% retracement, and the 50 EMA needs to close above this and head towards the 89 if prices are to continue. Again, the non-farm payroll numbers should take care of this today. And again, you'll see yesterday's or Wednesday's low hits, and again you've got your climatic volume oversold, and then we see the buying coming in at prices closing above the previous day's close and the 5-bar moving average, and then moving to the upside there as well. So in the daily chart, like I say, watch these two areas, and in particular the 50 EMA needs to take this out as well. At the moment, it's a bit of a resistance level there, and again, depending on whether the market's allowed to move lower or not, who knows. But if they are, then again, you'll just watch a straight reversal on yesterday's daily bar if the news is really bad and the market can't really hide it. But then it couldn't have been more blatant yesterday with the factory and ADP numbers, but there you go. Let's have a look at the German DAX, see what happened in Europe yesterday. And you can see here as well, straight reversal off the previous day's low. Well, not quite the low, I'll show you that in a moment. We moved up and we're above the 78. We've got the 89 here, and then we've got the recent high over here as well, which these fibs tie into. Also got a bit of resistance there at 14,600. We're just currently above that at the moment. In the 30-minute chart of the German DAX, you can see that we came within a gnat's whisker of the low, but we did have the market coming off the close at the start of yesterday's session. When the US opened, we barely moved to the downside. You can see that the 50 EMA was holding the market. We've got the DP there as support as well. And also, again, you'll see that buying that comes in here, the same as the Dow and the S&P. Then we drive through the 200 MA, the black line there. We've already gone long. We've got the crossover, and then the DAX moving to the upside there as well. So during the Dow session, we see the DAX moving off until the close of the Dow there, up 209 points. So a decent move after the 4:30 close for the futures as well in Germany. Overnight prices sideways, finding support at the 20-bar moving average. The high again is just a stone's throw away, about 30 to 40 points if that, and prices no doubt will have a go at this when they open the futures market at 7 a.m. In the 5-minute chart, you'll see yesterday that we had the close. The low is just slightly lower. There you go, just sitting at this area here, just below the BRN, which is going to be 14,300. So yesterday morning, then the futures open, we were oversold. We then became overbought with the supply. We dropped back a smidge there, 38% retracement from there to there. The market broke through the 200 MA. We were oversold. Market moved higher to begin with, and then you can see the pattern. We pull back, we find demand, we're oversold. We then move back up, make a new high, overbought with divergence. I crossover, pull back. You can see that's a 62% retracement. Oversold, overbought to 89%. You see that there, and then we drift down to overbought, but we've got a bit of momentum and divergence there, which is highlighted here, with the market moving back and then trading sideways. We then get the ADP numbers, which you can see here. Let me just widen the chart out. That's the release of the ADP numbers. They were bad news, and the market did move lower on these numbers initially, and then we got into a bit of a messy situation. Well, the Dow had its sell-off, and then once the Dow had traded down to the low, I don't know whether it's the plunge protection team that came in, but then the market was moved back to the upside. As I say, just after 4:30 when the futures closed in Germany, the market moving strongly and tracking the Dow all the way through the evening there. Overnight prices stuck in a bit of a sideways range, still at the close at the moment, and we've got this support here, quite a lot of support, as you can see by the number of green lines there at this time. We're currently being oversold and now overbought. Just stuck it in this defined range that you can see here. So waiting for the 7 a.m. futures to kick in there. Right, let's have a look at the JPY and the British pound. Starting off with the GBP JPY, you can see that the market has traded up to, let's just get this here, it's about 89%, and it's spot on the 89 there. So You can see why prices have stopped here at the moment, and what I would be inclined to do as well, depending on what the non-farm numbers are, just throw in a few downside targets there just in case. The currencies haven't been that volatile in the daily chart. There's been some nice moves in the 30-minute chart, which you'll see there as we came off the divergence yesterday being oversold, the market then moving higher but then trading sideways, waiting for the ADP numbers which came out here, and then moving to the upside there as the dollar moved lower during the afternoon session. The pound also reversing yesterday because the dollar moved lower, finding support at the 38% retracement, which also ties in with the low. So let's just draw in some upside targets here just in case we see the dollar continue to move lower after the non-farm payroll numbers at 1:30 today. So let me just bring those back into focus there. So they would be the upside targets that I would put in there, but the market at the moment is struggling with the 5-bar moving average. In the 30-minute chart, again, you'll see, if I just move this over, we were down towards the previous day's low. Again, sideways, stuck in a range. We were oversold, and then we've got divergence, and then the market starting to move to the upside. ADP numbers, then the pound moved a bit lower to the DP, got a cluster of volume. We had some divergence as the market made its way back over the next hour. As soon as the dollar started to move lower, the pound moved higher. And again, overnight, like all markets at the moment, very, very quiet. Okay, and finally, let's have a look at the metals market and the US dollar. So in silver, you can see yesterday it was allowed to move to the upside, which is a bit of a brain fryer because we're so used to the market being slammed to the downside. Maybe they're bringing it up to slam it if they want to interpret whatever the non-farm payroll figures are going to be today. But at the moment, we're back to the upside and we're above the $22 at the moment. So $22.50 is going to be the next target that needs to be taken out. Plus, we've got the 50 EMA. We're back above the 20 bar and the 5, but we've got to get back above this 200 level if the market is to show any sort of strength there. And that is going to be 89% just at the 50. And if we move to this one, we get just a slightly closer. But like I say, the goal really is to get above that 200 moving average level there in order for prices to move higher. 30-minute chart for yesterday. Well, after I recorded the market alert, it moved to the upside, and that's what it did. Spot the London fix. Yeah, that's it. But again, the dollar's response to the ADP numbers moving lower, and silver was allowed to move higher and actually trade through. This is the $22 level because it had got through in the morning. I thought they might have slammed this back down at the 1 p.m. and then certainly the 1:15 with the ADP, but no, they managed to bring it back, and significant buying here as well, moving prices to the upside. So we need to stay above yesterday's high and keep these prices moving, I say, in the daily chart to the next upside target. Certainly 22.50 is going to be the area to watch out for today. Gold was allowed to move higher yesterday as well. You can see that prices managed to trade through overnight of the 1869, 1870, but at the moment is down slightly. And then finally, the US dollar down yesterday, which is why the pound was up. The metals were up in response to this. However, watch out today because it's going to rely on its direction from those non-farm payroll numbers, and you will see the market is currently sitting at 78% retracement, and it's also oversold as well. We're starting to show a bit of momentum to the upside. If the news is really bad and the dollar moves lower, it'll need to take out that 50 moving average that we can see here as well in order to move to the downside. And of course, the low of the dollar index as well, which comes in at 101.26. It'd be good to see this break back below the 100 level. which is a bit lower than this, is 170. So there we go. That's it for today. Let's wait and see what the non-farm payrolls are going to be doing. As I say, I'll be missing in action next week, but I'll still be trading. But I'll catch up with you a week on Monday. So like I say, brace yourself. It's been a quiet week this week. It's been half term and the Jubilee celebrations, but we should get back to a lot more volatility, hopefully, from Monday. Okay, that's it from me. As ever, thanks for watching. See you in the next one.